I talk about this concept in a lot of my videos. Bitcoin runs out at every single price. No matter what happens, no matter what US dollar price you have Bitcoin at, it will eventually be a rounding error. So let's say right now Bitcoin is at $87,000. Eventually, I think that the people who are willing to sell their Bitcoin for these prices are going to run out, and there's going to be no more Bitcoin available for these prices. So what's going to happen is over time, we're going to see the price go higher and higher and higher. And I strongly believe Bitcoin is going to, well, back to 100,000, then it's going to a million, then it's going to 10 million, then it's going to 100 million, because it's going to run out at every single one of those prices below it. Like it will never go back to $1, will never go back to $10, $20, $50, all those prices below where we are today. We're never going to go back to those prices because the people who are willing to sell at those prices are not available anymore. There's nobody willing to sell at those prices anymore. So I think, like I said, Bitcoin runs out at every price.
So this is kind of an idea of it runs out at every price until, I guess the question I have is, what is that end goal? Does it replace, like it runs out at every price because nobody is willing to sell it at any price? Is that kind of the idea at like
The
a
price
certain
just
point?
keeps getting higher.
Yeah. The prices keeps getting higher. Because there's so many more dollars that are available, there's going to be more dollars chasing Bitcoin over time. People who are willing to give away their Bitcoin for dollars are running out, right? They're you guys, for example, would you be willing to sell your Bitcoin if Bitcoin goes back down to $5,000? Probably not. You're going
No.
to be buying. So what you're going to be doing is you're going to be taking supply out of the market, and then you're probably going to wait to sell. Let's say it goes to $1 million. Maybe you'll sell a little chunk. Then it goes to $10 million. You'll sell a little chunk to pay off your own lifestyle, to improve your lifestyle. I think eventually what's going to happen is nobody's going to want dollars for Bitcoin.
Right.
Yeah. And this is kind of how I think about it. And this is the beautiful thing about Bitcoin for me, is that as that happens, let's say it goes from 80 to 100 to 200K, and the people who are holding Bitcoin right now, they probably have some sort of an idea of what they might spend it on in the future if they get to that point. Because yes, it's great to hodl. We kind of covered the never sell aspect and why that, is bad marketing for Bitcoin. It's just money. It's you hold on to it until you're ready to buy something with it. And the nice thing about Bitcoin is that it appreciates over time, or it has historically. So it goes from 80 to 100 to 200. And as Bitcoiners here, we probably have an idea of things we could spend it on in the future, whether that's a new truck, a new cabin, a new house somewhere, whatever that is. And you wait until Bitcoin gets to this price before you sell some of it. But you're never going to probably sell your full stack. You might sell 5%, 10%, whatever that is. And the beautiful thing about that is as that keeps going up, you have to sell less and less of your Bitcoin for the things that you need. So as the price runs higher, you actually have to shave off a smaller and smaller percentage of your stack as time goes on.
Yeah.
That's the idea here, right?
Yeah.
It's crazy.
Yeah. It's pretty interesting to think like there's no sellers. There's no sellers at like 10K now, like
Right.
like Rajat said at the beginning, like if it goes down there, there's only buyers. And I think that part of this is maybe hard for people to wrap their head around because they don't understand like what actually why there's a price, like what determines price. Price is determined at the margin of buyers and sellers. And are people willing to sell, and who's willing to buy, and at what price? And so if if the price runs up like crazy, that's going to draw out new sellers at certain price points. But if the price drops, there might be some sellers, but I think there's a lot less because a lot of people are beginning to understand more and more what this is. And so the downside of Bitcoin seems to be lessened in my eyes. Like I don't see like crazy downside in Bitcoin's future anymore.
Yeah. So this is just a simple supply and demand chart. Based on what Forrest was saying there, you have a certain amount of demand available. You have a certain amount of supply available. When supply and demand meet, that's where you have the equilibrium price. That's where the price is determined. So we have the price on the y-axis, we have the quantity on the x-axis. So
Right.
what happens is if supply outpaces demand, the price comes down. If demand outpaces supply, then price goes up. And with Bitcoin, the fundamentals tell you that demand will always outpace supply.
Yeah.
There's always going to be people who are willing to buy Bitcoin. No matter what happens, the equilibrium price is going to have to keep rising and rising because demand is going to keep shifting up, but supply stays the same. Supply is based on people who are willing to sell their Bitcoin. If there's no Bitcoin available at a certain price, the price is just going to pump up higher, right? And I don't know if we're going to go lower. Let's say we go back to the 60K level. Let's say we go back to the 30K level. Eventually, we'll never go back to those prices again. Eventually, we'll never go to five-figure Bitcoin again. Right now, we have that opportunity to buy Bitcoin at these prices. People in the past had the opportunity to buy Bitcoin for a fraction of a penny. Then they had the opportunity to buy Bitcoin for a penny. Then they had the opportunity to buy Bitcoin for 10 cents, then a dollar. It keeps rising and rising and rising until the Bitcoin at that price runs out. It's like Forrest, you just said. At certain prices, there are only buyers. There's no sellers. And that concept, I think once you understand that concept, it shows you why Bitcoin's price keeps rising, and it'll keep rising literally forever because more and more people want optionality. Bitcoin is optionality to buy whatever you want to.
Yeah. And there's also the idea here, like we're talking about supply and demand with buyers and sellers, but there's also this idea of Bitcoin with a max supply in total. And there's this thing that happens with every other asset, and especially commodities. Commodities is a really good example where when demand goes up, supply isn't just who has something that's willing to sell it. There ends up becoming more supply in the system because the producers are realizing that demand is there and it becomes profitable for them to produce more of it. So this happens different commodities have different stock to flow ratios. The best stock to flow ratio of a commodity is gold. And so historically, it's been very hard for demand to increase, or sorry, for supply to increase when there's demand. And that's why it's been a good store of value. But ultimately, that supply can increase and it fluctuates to some degree. And we have no idea how much it can increase or to what total market or what total supply it could increase to. Whereas Bitcoin is the first thing and the only thing that we have an absolute guarantee of a max supply of 21 million coins.
Forrest, can I just ask you to, if you're able to, can you explain that stock to flow a little bit better, just so that people who don't understand it, they can get a better understanding of it?
Sure. So I'll explain it through examples. So gold is fairly rare. So there's kind of a difficulty adjustment with from nature. So if gold miners are trying to seek out gold, they're going to try to get the most easily accessible gold, and therefore the supply of it is going to grow pretty rapidly at the beginning. And throughout history, that's the case. And improvements on technology and discoveries and all of this is going to increase the flow, and it's compared against its stock. So we can look at the second best kind of store of value in nature, which is silver. It has a much higher stock to flow, which means that it has less stock, so it has less amount of people holding it compared to the amount of flow. So flow is the amount being produced. So it doesn't hold its value as well as gold does. Part of that is because silver is more used as well. So that stock is actually being consumed. It might come back into stock eventually, if it's recycled or something like that. But it basically leaves stock and gets put into production. So where should I go with that?
I think what you're saying here is that over time, as the stock, over time, the stock of silver stays about the same, but the flow also stays about the same. On the other hand, with gold, the stock increases and increases and increases because you can't consume gold, and then the
Well,
flow as a proportion of that stock decreases over time. Because let's say you have 1,000 ounces of gold being mined every year, the stock that's available is going to keep increasing, and eventually it'll be 1,000,000 ounces, then it'll be 10 million ounces, it'll be 100 million ounces, but then the flow stays about the same. So it'll stay around, let's say, 1,000 ounces a year. So what's happening is the flow, the amount of Bitcoin being added to, or the amount of gold being added to the economy, is constantly decreasing in proportion to the stock. Is that what you mean here?
I think the flow is when the new gold coming out of the ground, is it not, Forrest?
yes, it is. So what I'll say here is the silver is much more abundant. So
Yeah.
silver is much more abundant and easier to access than gold. So it's actually a lot easier to increase the flow of gold relative to the stock. So that means that it can become debased, or supply can
Of silver.
outpace demand in
Of
silver.
silver.
Yeah,
Of silver. Yeah.
in silver. Yeah.
Yeah.
So
Okay. That makes sense.
there's a lot of I mean, there's a lot of variables. You need to look at like cost and if there's a replacement metal. So with silver, it's an industrial metal now. It's been demonetized. It's not a monetary metal. So if silver, if the stock becomes really low, it's going to raise the price of it because there's less supply. And so some people might move to other metals, or the flow might increase to meet that demand.
Mm.
And silver is a lot more elastic because it's a lot more abundant. So it can increase its flow a lot more, which is why nations in the past that were on a silver standard compared to nations that were on a gold standard got exploited by the countries that were on gold standards, because they could extract a bunch of silver, take that over to that nation and spend that silver and extract a bunch of valuable goods and services while being on a harder money to debase, which is gold. So this kind of comes back to this whole idea of not adopting the harder asset or the sounder money puts you at a disadvantage. And this has happened historically. So China and India and Mexico were all on silver standards, where France and England were on gold standards. And because they had adopted a harder, sounder money, they were actually able to export a bunch of value out of those nations because they
Wow.
were on a weaker money.
Really great explanation.
So big picture, I guess, just to kind of round that out. So kind of my takeaway from it is that the flow is the new production of it. So how easily it can be created. So silver is easier. It has a higher flow than gold, right?
Correct.
And the stock is like how much people are willing to actually hold on to, where silver would be low stock because it's used as a consumable good, whereas golds would be high stock because people usually HODL gold, or they use it, they put it in their safes in their basement, right? That's kind of the two things there. So if we think about in terms of Bitcoin's very hard to produce. And so the flow would be low and the stock is high because people typically, when they get Bitcoin, they don't spend it right away. It's not going back into the market. So it kind of has the same characteristics of gold, except I would say at a higher level. And it makes me think of Jack Mahler's speech from, I think it was Bitcoin Atlantis, where he said that Bitcoin, gold is stuck in the ground and Bitcoin is stuck in time.
Oh, yeah.
Which really blew my mind, because
Yeah.
that kind of ties this whole thing together in terms of like, as demand for gold increases, you can go create more of it from the ground. You can dig it out of the ground. As the demand for Bitcoin increases, you can't do anything but wait for it and try to hit that next block, because the difficulty adjustment, because the blocks are spaced out every 10 minutes, you have to find a way to travel into the future, which I don't know how to do that. But that's the difference here. That's what makes Bitcoin a harder asset than gold, and especially in terms of like the flow aspect of it.
Exactly. And the stock to flow is a ratio. So those two things are based off of each other. So because silver is being used and the stock is going down, relatively, the flow could stay the same, but it's actually increasing in ratio compared to the stock. And because gold doesn't have much of a use case, right? It's jewelry, a little bit industrial, mostly though, it's being held, which is increasing the stock. And if the flow is also increasing, but relatively it's staying kind of similar. But right now, the stock to flow ratio is twice, on average, twice what Bitcoin's is after the last halving, because the halving dictates Bitcoin's stock to flow ratio. And there's no guesswork to Bitcoin's stock to flow ratio. We actually know what it is. It's a very useful measuring tool. And we know that it is twice as hard to increase the supply of stock of Bitcoin than it is to increase the stock of gold, even though the gold is super abundant in the stock side of the ratio. There's tons of it in warehouses and all that.
Yeah, and I was thinking that at random times during the year, random times in history, we found massive amounts of gold stuck in the ground.
Yes.
And nobody can predict that. Nobody can guess that's going to happen. But you can't do that with Bitcoin. With Bitcoin, we know for a fact that there's only going to be 3.125 Bitcoin created. And It could take a little bit less time because some blocks take a little bit less. Some blocks take like say 30 seconds to create. Some blocks can be there. Like there can be blocks created one right after the other, but then there's going to be blocks that take an hour, 10 minutes, 15 minutes, 20 minutes, 30 minutes. So the average per block takes 10 minutes. So on average, every 10 minutes, you're going to have a certain amount of Bitcoin entering the economy. On the other hand, with gold, you have no idea what the average time is going to be. For all we know, there could be gold being taken out of the ground and none of us know. None of us have any idea. So if you have gold in your safe, how do you know that, let's say somebody in Africa isn't mining gold and they just didn't find, they just found some random store of gold in the ground that they're going to slowly take out of the ground and sell into the market?
Who's accounting for that, right? There's no
Exactly.
accounting for it. And the other thing that really blew my mind with this is, say we have an energy technology breakthrough. We have fusion energy created, energy abundance. It's absolutely free. If you put a bunch of energy towards mining Bitcoin, that's not going to create more Bitcoin because the difficulty adjustment will adjust for that. But all that energy could also go towards mining gold, and it would become significantly easier to extract the gold. Like we could build rocket ships and go mine asteroids, or we could dig super big tunnels because we just have the energy to do so. And we could generate a huge amount of gold, which would again increase the flow compared to the stock. And it's that variable that is, really out of our control.
And it's happening right now. We can see the hash rate for Bitcoin, the amount of people that are willing to put in the time, energy, and effort to create more Bitcoin is rising, but the amount of Bitcoin being produced isn't changing. It's still staying at that every 10 minutes per block. So what we know for a fact is that the next halving will be in 2028. We don't know exactly when, because of course it could be April, it could be May, it could be March, it could be some point. It'll be some point in 2028. But we can't tell you that the supply of gold is going to have in 2025, 2026. You can't do that because there's no way to determine that with Bitcoin, because it's programmatically limited to a certain supply, and because the difficulty adjustment is, again, it's programmatically set up in the code. Nobody can change that. Even if you wanted to, make it so that the block time takes 5 minutes instead of 10, you can't change it. But then the good thing about this is that most of the supply of Bitcoin was created in the first 4 years. So even if somebody does find some kind of technological breakthrough to break this, to make it so that it takes 5 minutes per block, after 21 million Bitcoin, they can't do anything. They can't create more Bitcoin, regardless of what happens.
That's a good point too. Yeah. I mean, the difficulty adjustment is completely underrated in Bitcoin. It takes a little while to understand it. It's not the first thing people explain about Bitcoin to you. And once you discover it and once you understand it and comprehend how significant it is, because nothing else like that exists, it's you can never look back.
I would say it's the most important part, honestly. And
it's up there.
Maybe just quickly to try to explain it, just in case there's any people who aren't as familiar with it. The way the difficulty adjustment works is, if we think about this in terms of getting things out of the ground versus getting things out of time. When you think about the difficulty adjustment, every 10 minutes on average, a new block is mined, new Bitcoin is created. And so if you think about it, somebody could allocate all of a sudden a bunch of energy towards Bitcoin, the Bitcoin network, to increase their chances of winning a block. And they could just hammer hash rate. You saw the chart that Rajat put up there. That would spike, and the blocks would start coming in quicker. But after 2 weeks approximately, or X amount of blocks, it gets cranked up, which makes it harder. So that whatever energy you just sunk into the network is pretty much null at that point. You can't just keep increasing it. It's just not physically possible to do. So the way I think about difficulty adjustment is, the more power and energy that comes onto the network, the easier it is for people to find the block, the faster the blocks start coming in. As energy leaves the network, as people unplug their miners, it gets harder to find the next block. So that's when it's harder, the difficulty adjustment goes down. And when there's more and more people mining, the difficulty adjustment goes up, because it has to be harder to keep that 10-minute average of new supply coming onto the market. So people could technically try to game this, but it wouldn't last very long, because when that next difficulty adjustment kicks in, it's right back to where they started. So that's the incentives there is, instead of wasting all that money to try to cheat this thing, just buy Bitcoin. That's kind of like where the incentive mismatch is here for somebody trying to do an attack on Bitcoin.
That's
It
it. So we
protects
can see here.
Bitcoin.
Oh no, go ahead first. Sorry.
I was just going to say the difficulty adjustment really protects the Bitcoin network from attackers.
Right.
Because it after you can speed up the blocks coming in for 2 weeks at max, and then boom, that's it. Then the network has protected itself, and you're going to have to ramp up protection again if you want to try to attack the network. But all you're doing is basically building the network.
Yeah. So we can see here. We can see here. It takes right now the average block time is 9.6 minutes. So it takes 9.5 minutes to get one block on average, because that's just how much energy is being contributed to the network. And because of that, because we're ahead of schedule, we're 56 blocks ahead. We need to adjust the difficulty by 3.78% to make up for that 0.4 minute loss.
And it happens in 3 days, the next adjustment.
Yes.
And it's auto calibrating. So it's really just trying to calibrate for 10-minute blocks. That's all that's what its goal is. And it's not going to be perfect. Like right now, it's off by 3.78%, but it's going to adjust for that. And that's going to make it more difficult for miners. So if they're barely profitable mining right now, and the block, the difficulty adjustment happens, then maybe they won't become profitable. They'll have to shut off, but that's all part of it, right?
And the best thing here is there's no subjectivity. There's no humans here. There's no emotions involved. Regardless of what happened, if this number is below 10, this is going to go up. So the difficulty adjustment is going to go up. If this number is above 10, like there are times where you see that it takes 10.5 minutes. I think that's the most that I've seen on average. But if this number is above, then this number is going to go down. And over time, what I've noticed is, I don't know if you guys have noticed this as well, but over time, it's not taking exactly 4 years to get to 210,000 blocks. It's taking slightly less because over time, more and more computers are joining the network. So temporarily, it could take less time to mine the same amount of Bitcoin, but if it goes too much higher, then it'll automatically just mean revert. So on average, at least what I've seen, each block takes less than 10 minutes. Like if you go all the way back in history.
And that's just because we're seeing rapid more addition of hash rate to the network. Yeah. So it's going to take a little bit less every single 2 weeks is on average taking less than 10 minutes, and it's having to adjust on average upwards the difficulty adjustment because there's so much profitability and so much want for hash rate.
Exactly.
And it's I mean, with the hash rate now, we're starting to see the countries are taking note of this, and they're realizing that this is not only a good investment for them, but it's a matter of national defense. So that number, I know when we zoom out over 16 years, it looks like it hardly moved for the first 10 years. I think in 10 years from now, the big spike up is going to look like a little blip on the radar based on what's coming here. But I just wanted to kind of circle back here and say the reason why the blocks are every 10 minutes, the reason why it's designed in that way is so that the network can come to a consensus, that everybody can agree that these transactions are indeed legitimate. And so when you look at other networks like Solana or XRP or Ethereum, their blocks come in much faster. And that's why we see some of their networks go down, is when they can't come to a consensus, they're just like, okay, what's going on here? We got to stop this. And that's the beauty of the 10-minute increments, is that so the whole network can come to a consensus to say that all these transactions within this block are indeed valid, and we can move on to the next block. So it's an important aspect of it.
Yeah. Okay. So let's go back to that main topic here. Bitcoin runs out at every price. We talked about the difficulty adjustment. I think that was key. All of that was so important. All of that was so important because it shows you why Bitcoin is going to run out at every price. No matter what happens, no matter how high the price goes, this thing is inelastic. Nobody can change the supply. Nobody can stop other people from demanding Bitcoin. Over time, more and more people will want Bitcoin. So again, Bitcoin runs out at every price because we can't increase the supply if the price does go up. On the other hand, with gold, for example, if the price of gold goes to like $50,000, I guarantee you that there are going to be people who are going underwater into the oceans to mine gold.
Pulling out their teeth.
I think it's really interesting to think about who sellers are. So historically, miners of Bitcoin have been sellers because they need to sell to pay for their electricity costs, their warehousing employees, their new ASICs, all of this. A lot of them are maybe temporarily not selling and hodling instead and financing their operation. But we think about commodities in general, it's a lot of gold sellers are gold miners and gold smelters and gold producers. And I think that's just going to continue to dwindle in Bitcoin's case, where there's going to be less of these producers of Bitcoin or the Bitcoin miners selling. And then it's really who's left over, just people with Bitcoin. And when are they going to sell? Whenever they want to upgrade their lifestyle, which is a lot less like kind of demanding. There's a lot less need for them to sell, right? And then think about who the buyers are. There's a lot of people who are starting to begin to understand what Bitcoin is and need that optionality that Rajat talked about. So if you just look at those dynamics, and if price is built on buyers and sellers, it sure seems like there's going to be a lot less sellers in the future and a lot more buyers. And that means price appreciation.
Yeah. And we can see like the top 4 out of the 6 companies, I think, so Hut 8 is a miner. Is CleanSpark a miner?
Yes.
Yep.
So CleanSpark is a miner, Riot's a miner, Marathon is a miner. So the top 4 of the top 6 companies that are holding Bitcoin publicly are miners. So before they would have sold their Bitcoin, and now they're finding ways to they're basically using the MicroStrategy playbook or strategy playbook to buy as much Bitcoin as they can and just hold on to it. So they don't even have to sell.
Yep.
Yeah, they can take on lines of credit to pay the electricity bills because they expect the price to go up. Otherwise, they would be selling it instead of holding it right now.
Yeah.
The last thing I wanted to say on this is I think Rajat mentioned it earlier, or somebody did, sorry, but the 50% increase or the 50%, what was it? The first halving or the first epoch, 50% of the total supply that will ever exist was mined in those first 4 years, which means that those were to individuals like us for the most part. There wasn't companies here. There wasn't governments here. It was individuals. And so that's who's holding the majority of Bitcoin right now, 70%. And so when we say the price will continue, or what are we titling this one, Rajat?
So Bitcoin runs out at every price.
Bitcoin runs out at every price, because when you think about it, the people, in that first 4 years, they probably still have some Bitcoin, which they acquired for like $50, $100, $2. So when it goes to 100,000, like that's a huge profit for them versus somebody who bought in at 70 or 80 or 90, and maybe they're at a loss right now. Like you have to keep in mind here that everybody bought Bitcoin at different times at different costs. And the people, as that new supply came on the market back in 2009, they're laughing at 100K. That's a massive gain for them. So as they run out, of course, the price is going to go up because the people who weren't here at $5 are now wanting more for their Bitcoin to part with it.
Yeah. And then over time, what we see is that the people who have Bitcoin from the beginning, like you said, they have to sell less. So let's say somebody has 10,000 Bitcoin. They have $1 billion worth of Bitcoin. They don't have to sell that Bitcoin. What are they going to sell it for? What are you going to buy for $1 billion? So they just hold on to it for longer and longer. And it makes it so that Bitcoin's foundation becomes stronger and stronger and stronger because nobody's willing to sell. Everybody just wants to buy. Everybody just wants to hold.
Yeah. And I know a lot of Bitcoiners that hold a lot of Bitcoin and they drive old cars, squealy wheel, like fan belts, and they go on nice trips and stuff and experience things, but they're pretty frugal people. And that's because they understand what they have and they don't want to part with it unless they have to, or, until certain price points, which is, again, to this main point, that it's going to take a lot more price action to the upside to draw out some of these people that have been hodling for a long time.
Yeah.
Well, boys, I don't think I've ever smiled more in my life in this last half hour here. It's just when you guys say things and we think about different topics here and understand what we're holding, it's impossible not to smile. Yeah. So another great episode. Rajat, do you mind pointing to the QR code right beside your head there? Big shout out to everybody who has been supporting this channel. We do plan to keep it ad-free for as long as possible. We want this to be community funded. And so we're not, jamming things, unnecessary things or unwanted things down your throat all the time. So bad analogy, maybe a little bit offside, but sorry. Anyways, thanks, fellas. We'll catch you on the next one.
All right.